morning, dear guests, speakers, and delegates. A very warm welcome to each and every one of you to the 8th Annual Gold and Gold Markets Conference 2025, conducted by the India Gold Policy Center, Indian Institute of Management, Ahmedabad. It is an honor for me to stand before such an esteemed gathering of experts, leaders, visionaries, and academicians as we embark on this journey of insightful thoughts and valuable exchanges. Today marks the beginning of an exciting and enriching experience where we delve into astute discussions on gold and its manifestation in the Indian economy. Over the next 2 days, we will be witnesses to thought-provoking sessions, impactful deliberations, and groundbreaking ideas that can shape the future of gold usage and trade. Before we begin, let us invoke the blessings of the divine with the traditional lighting of the lamp ceremony, a symbol of wisdom, knowledge, and enlightenment. I invite our esteemed dignitaries, Director of IIMA, Professor Bharat Bhasker, Chairperson of IGPC, Professor Sundaravali Narayanaswamy, and Chief Economic Advisor to the Government of India, Shri V. Anantanageshwaran, to kindly come forward and light the lamp. Thank you, esteemed guests, for gracing this occasion with your presence. With this, we officially commence our conference. I invite Sundaravali ma'am to welcome our guests. Now, to formally welcome us all, I invite Professor Sundaravali Narayanaswamy, Chairman of the India Gold Policy Center at IIMA, to deliver the welcome address.
Good morning, everyone. It's with great pleasure and enthusiasm I extend a very warm welcome to all the esteemed audience here, the gold research community, the policymakers, the industry participants, on behalf of the India Gold Policy Center at IIM Ahmedabad. I am particularly pleased that this particular edition, the 7th IGPC-IIMA Annual Gold and Gold Markets Conference was also held at the same venue. And in this particular occasion, we are meeting our industry colleagues and industry friends in a very short while, in a very short interval. Just in December last, we had a IMRC conducted by IIM Ahmedabad, and we had a very engaging discussion at our IIM Ahmedabad campus. Now this is the very close time we are meeting once again. And in this particular opportunity, I express my gratitude to my Institute Director, Dr. Bharat Bhasker, and Dr. V. Anantanageshwaran, Chief Economic Advisor, who has gracefully accepted my invitation to be the chief guest of this esteemed conference of us. Thank you very much, Dr. Anant. Thank you, Dr. Bharat Bhasker. And from our continued discussions, I believe that it is a very understatement to say that gold continues to hold a very important role in the economic, in the national economy. in particular, when you look at the value chain and the commerce in which we are talking about, in terms of turbulent global politics, gold is something that is being talked about very often, and we understand where exactly gold is heading. This is a question that lingers in all our minds, whether it is an academic researchers or the policymakers or the industry people. This is something that we keep talking about. In evolving times, IGPC at IIM Ahmedabad, we have provided several inputs to the policymakers on rationalizing duty structures, hallmarking, monetization, and spot exchange, as well as the institutions like IABX or IFSCA or other organizations in the country. And in this particular edition of our conference also, I hope our conversations would be very useful and should be very meaningful to the industry. That's what I'm hoping so. And in particular, some of the inputs that we have given to the policymakers has been with regards to import duty structures. And particularly when you look at these numbers in the previous year, our one thing that we keep insisting about is to how to rationalize import as well as how to increase exports from the country. In the year 2023-24, our US dollars, the export from gold sector was US dollars 6,670. Vis-a-vis the current financial year, we had crossed 7,200. So this is something that we keep talking. How can we increase the export value of gold and gold sector? So in some of the inputs that we have communicated to the government has been very well received. So this is a matter of pleasure to us. And the second aspect that we talk about is whether we can bring in some sort of synergy between doré and bullion imports. That is also we are trying to look at. And is there a merit in considering new partnerships, considering where exactly we can import gold and doré from? That's another thing that we are talking about. The third point that we mentioned is about recycling of gold. We had talked about multiple times about digital golds and paper gold, in particular about the GMS schemes, etc., etc. These initiatives, there is a merit for us to, we consider as a think tank and as a research center, we consider that there is a merit in pursuing rigorous research in understanding the efficacy of initiatives and schemes that are proposed by the government of India. Like the scheme has been initiated with a purpose and with an objective. Whether the stated objectives have been achieved, where exactly are we lacking, where exactly are we heading, and who are all the stakeholders? Does it serve the purpose of the scheme? So that is something that we try to look at. And we also look at how organizations and institutions have been functioning. Is there a merit for us to reconsider or redefine our paths in which we are heading? These are all some of the research questions that we continuously we deliberate about, and we try to policies which are wound around these questions. And the fourth research part that we want to consider and that we are considering, but that we talk a lot about, is technology. Intervention of technology in this gold business. And in fact, in this particular edition of this conference also, we are going to talk a lot about this. What is the impact of technology? Can we improvise traceability and tracking of this gold movements, gold supply chain? And what exactly, how technology can prevent this hoarding tendencies? So that is a fourth aspect that we look at. And on this particular occasion, I would like to tell few things in which IGPC is headed for the next year, or what are the target areas. In the near future, we are going to launch a book. We have almost come with a book, and a book is being written, and this book is on India's gold, and this is going to be published as IMA book series. And we are signing a contract with one of the biggest publishers of this country, and this book is going to come up very soon. You will hear from IGPC, this is coming very soon. And the next thing that as IGPC, as a think tank that we are coming is, we are going to launch a series of training programs, executive education programs or management development programs, corporate training programs, whatever you want to call it, in gold and gold markets. And this is upcoming in the next year. And I know Professor Bharat Bhasker supports this, and I had a conversation with the chair executive, and this is going to come up very soon. And this training program would be either it should be, we intend to deliver these training programs for this gold business, and this is again going to be an one of kind initiative, because consistently industry has communicated to us that there is no good training programs in this business. So we may be launching this from India as well as Dubai. That's the initial idea, but we are deliberating on this. So these are the two additional things which we are going to expect from us in the next year. And the third thing is that our IMRC India Management Research Conference is an last year we launched this conference, and this is going to be an annual event for us. So our IMRC, which will be hosted in our campus at IIM Ahmedabad, will have a panel or a separate thing from IGPC. So this is going to be, again, it's going to be in the first week of December 2025 in our Ahmedabad campus. So these are some of the things which are coming up from IGPC. And today in particular, in these 2 days of conversations, we intend to have some very interesting and very engaging discussions on a host of panels that we thought would be very useful to the industry. So some of the panels that we are going to have is one on consignment based gold imports, and the other on the significance of doré and bullion bar imports, and particularly the role of IABX as an institution in that. And then how another panel is going to be on how to make jewelry as a very competitive sector for the country. And we are also having a panel on digital platform in Web 4, and how do we export bullion exports. See, these are the 5 panels that we are constituted for these 2 days. And apart from a host of expert talks, as well as academic conversations, academic papers. So these are all some of the things that we are going to have in the 2 days for you to come. And as I keep repeating, when I took up this, and I had been talking to you quite a number of times, if not for IGPC, as on my personal behalf, I always say that I had taken it as a personal mission or something like that. We can always say that, we say India should be the gold capital of the world. And it is very heartwarming to see that Government of India and all the policymakers are, I find them very positive to this gold sector. And so these 2 days are going to be very engaging. So I welcome all of you to this August gathering. And in particular, I am thankful to the speakers who have immediately agreed and who immediately wanted to come and take part in this event. A little later, we will have our chairperson of IFSCA, Sri Rajaraman, couldn't be there now. He will be joining us in a few minutes because he had another important engagement elsewhere. So he will be joining us a little later for his keynote address. And until then, our chief guest, Dr. Anand Nageshwaran, I'm extremely thankful to all of them. And let me invite Dr. Bharat Bhasker to formally have set the tone of this conference. Thank you very much, everybody.
Thank you, Anand Nageshwaran ji, who has been a wonderful pillar of support for IIM Ahmedabad. He was there as a chief guest at India Management Research Conference only in December, and every time I think when IIM Ahmedabad looks forward to inviting him, we kind of take him for granted that he will accept our invitation. All the distinguished guests and delegates who have come for the Gold Policy Conference today, it's my honor to inaugurate this 8th IGPC Annual Gold and Gold Markets Conference 2025. Last year we had my first interaction. Of course, yours was a multiple interaction annually here for several years, and I got opportunity to meet many of you in this forum. I was pleased to witness firsthand the impact and success of this platform. Given the valuable experience, I am confident that conference will continue to serve as a vital forum for industry leaders, policymakers, and academicians across all the geographies. I look forward to insightful discussions on the evolving dynamics of India gold market and the regulatory landscape. When I assumed the charge of director of IIM Ahmedabad last year, I was curious to explore in a management school what a goal-focused research center is doing. It was kind of a oddity at that look to me at that point of time. But as I gained deeper insights into IGPC activities, and my curiosity grew further, and I began to dig deeper into it. I started appreciating the center's pivotal role not only in academic research but also the Indian gold industry. It quickly became evident that how significantly IGPC contributes to IIMA's broader research agenda, and in turn how this agenda strengthens the center's own research pursuits. As many of you may be aware, IIMA recently hosted first of its kind India Management Research Conference, where objective was to create a global level conference hosted in India, where rather than us looking to the West and trying to reach and present our research to them, we should be having a platform in India, and it was widely attended by almost 800 delegates from multiple countries. Of course, all the Indian top researchers were present in that conference as well. India Gold Policy Conference, although limited in our very specialized domain, is also one of our initiatives, which is unique in nature, where we want India to become the center for gold policy research and gold research. I take that's why pride in noting that IGPC also not only is contributing to this unique conference, also involved itself in the IMRC conference and created a gold track which made a substantial contribution in that conference as well, where the members from academia, industry and young researchers participated with full enthusiasm. The significance of IGPC contribution is not surprising, given the subject matter of the gold. Despite the dynamic nature of global economy, rapid technological advancement, gold continues to be symbolizing the value, stability and wealth of India. And India remains the world's largest consumer of the gold, with household viewing it as both an investment as well as consumption asset. Gold holds deep cultural significance in Indian weddings, festivals, celebrations, often passed down through generations as an integral part of household wealth. Beyond its cultural and personal value, gold also plays a critical macroeconomic role. The Reserve Bank of India, like any central bank, holds a substantial portion of its reserves in the gold as a safeguard against economic and geopolitical uncertainties. Central banks worldwide, including RBI, have been accumulating gold at unprecedented pace, reinforcing the role of global financial stability. What I believe is remarkable, however, is the breadth of the contribution and depth of the engagement that IGPC has facilitated within the limited time frame of only less than a decade, both at IMRC and as well as the previous editions of the IGPC Gold Conference. The presentations and discussions have spanned a diverse range of topics, from case studies, specialized artisans to household consumption patterns, bullion banking, duty arbitrage, and dynamics of global financial markets. I expect this edition of the conference would also integrate the various perspectives into cohesive and insightful dialogue. It is fascinating to observe that close linkage between the gold markets and broader transformation, whether financial, technological or regulatory, that India has undergone in recent years to enhance the ease of doing business. Most recently, in July last year, the Indian government took a historic step, aligning the IGPC's long-standing data-backed advocacy by reducing the custom duties to record low levels to achieve the trade parity. This is testament to the role that informed research and industry engagement can play in shaping the policy. Further, the fully operational India International Bullion Exchange, IIBX, in the GIFT City, Gujarat, is setting new records daily, reflecting India's evolving role in global bullion market. As a policymakers engage with India's major trading partners, the sector's growth will depend on how the industry embraces new global challenges, builds trust, and employs technology to stay ahead of competition. I hope that the discussion at the conference will continue to contribute meaningfully to this dialogue. Just as IGPC Insights have done in the past, being personally engaged with the technology and digital transformation, I believe that a critical step forward would be to integrate technology with the gold industry, and this would position India as a dominant global player. For instance, concerns about the illicit use of the gold often arise. By leveraging the blockchain technology, we can trace gold from mining to final consumption, ensuring proper traceability, transparency, and trust. The dynamic nature of Indian gold market also entails that the growth will be further propelled by fostering alliances among the diverse stakeholders. In this regard, I was pleased to see IGPC continue to expand its global footprint. In Dubai, where it actively participated in the Precious Metal Conference, in the panel of transformative potential of precious metals. This not only reinforced its own standing, but also enhanced IIMA's growing international presence. Further, IGPC has also been a key contributor to the inaugural edition of Global Securities Market Conclave at the GIFT City, an engagement that I am confident will evolve into long-term and fruitful partnership. On the topic of fostering the culture of shared learning, I am particularly pleased to recognize the information repositories developed and maintained by IGPC. The Center's Data Hub not only consolidates the latest and most relevant industry trends, but also serves as a crucial function in integrating the information from wide range of from the wide range of India's gold industry, and it also looks into policy implications. These reports, which are and data repositories which are produced and maintained by IGPC, provide valuable insights for market participation and academic researchers alike. It's no surprise then the both policymakers and industry stakeholders frequently rely on IGPC's data and the analysis to take the informed decision. As I invite distinguished policymakers, esteemed practitioners from the industry, and experienced researchers to take the center stage, I would like to advise the young researchers of this conference to carefully listen to the comprehensive and constructive dialogue to lay the foundation for their future research agendas. With this, I extend warm welcome to all the participants to share their insights, and also I am confident that deliberations here over 2 days will lead to a meaningful policy making and data-driven research which will also guide the future policies of this country and the gold policies of the world. Thank you. Thank you very much.
Thank you, sir, for your inspiring words on uplifting the Indian gold as well as the research agenda. We believe that under your leadership, IGPC can achieve remarkable milestones and your vision can continue to guide us towards excellence. I request Sundaroli ma'am to felicitate Professor Bharat Bhasker. We are pleased to have our chief guest, Dr. V. Anantanageshwaran, Chief Economic Advisor to the Government of India, with us here today. An alumnus of the 1985 batch of IIM Ahmedabad, Dr. Anantanageshwaran has served as India's Chief Economic Advisor since 2022 after being a part-time member of the Economic Advisory Council to the Prime Minister of India from 2019 to 2021. With a distinguished career spanning academia, policy, and finance, he has taught at premier management institutions along with contributing extensively to the economic discourse through media as well as his 4 co-authored books. He has held key corporate roles at the Union Bank of Switzerland, Credit Suisse, and Bank Julius Baer. It is my privilege to invite him to deliver the chief guest address.
Dr. Dr. Bharat Bhasker, Director of the Indian Institute of Management, Ahmedabad. Professor Suntravalli Narayan Swamy, Chairperson of the India Gold Policy Center at the IIM Ahmedabad. Ladies and gentlemen, I am very pleased to be here with you at the commencement of the two-day Gold Policy Conference. I'm also very happy to know that this is the 8th edition of this conference. I understand from Dr. Sundravalli that it's been a little over a year since she took over as the chairperson, and this is the second conference she is hosting. In my brief interactions with her, I have been struck by the intellectual restlessness that she has. She has lots of ideas, brimming with them, and is very keen to contribute to policy and also engage with policymakers actively, such that some of the issues that you in the industry face, either as participants, as researchers, or as regulators, etc., she wants to be actively contributing to and benefiting from this engagement. I could see that in the limited interaction I have had with her, and that augurs very well for the future of the IGPC and its role in the gold policy making in this country. So my best wishes to her. At the same time, some of the issues that she had flagged in her initial remarks, as did Professor Bharat Bhasker, with respect to the foreign trade implications of gold, the import duty structures, our ability and the prospect we have and the possibility we have of leveraging gold jewelry exports, and how to also allow for transparent price discovery of gold in the Indian context at the bullion exchange located in IFSCA, etc. If you have been expecting me to shed some light on them, I probably will be disappointing you. And therefore, you may be better off browsing your phone on social media for the rest of my remarks. What I'm going to concentrate on is the fact that gold is something that I was not actively following or examining from an investment perspective until about 2002. So in my rest of my remarks, I'm going to go back to wearing my hat as the capital markets participant that I was for nearly 2 decades in the industry until about 2011, and in an advisory capacity until 2018. From 1994 onwards, when I finished my PhD. So it was around 2001, 2002 that I got interested in this metal, not so much as an asset class, but for the role it has played historically as a store of value and also as a symbol of trust and credibility in policy making, particularly with respect to monetary policy. Even in days when there was no real central bank or monetary policy to be made, when kings had to borrow money from their wealthy citizens to be able to finance their wars, the purchasing power of the amount that they borrowed and the purchasing power of the amount that they paid back would obviously be different. And it was with the view to reassuring the lenders that their purchasing power would not be undermined that kings agreed to compensate them in gold. So from that point onwards, gold had basically been seen as a guarantor of purchasing power. Its solidity, it is variously referred to as a rock, as a biscuit, as a bar, etc. All of this signal solidity. And naturally, it is a metal that shines, which is also optically very attractive. And that is why gold has always had a certain cultural, economic, and not to mention in the Indian context, religious significance as well. Most things in life acquire their value due to their scarcity. What is scarce is valuable. What is available plentifully, unfortunately, is taken for granted. That doesn't mean that scarce commodities or scarce items should not command value. In fact, it is logical. And gold is something that is scarce simply because it isn't available everywhere in the world, nor can it be produced merely through human effort. It has to be endowed. And therefore, the sheer scarcity value of gold is something that will endure for time to come. And why has historically gold been seen as an inflation hedge? The reason is for the point I alluded to earlier, that it is tempting for any ruler, whether it is an elected government or royalty in the days gone by, it is tempting to basically create excess money to finance war or to finance these days deficit spending. And when policymakers therefore engage in attempts to create money supply, eroding therefore its value, people tend to turn to something whose value cannot be altered at the discretion of policymakers. And that is what gold was about. It is something that whose value cannot be tampered with at the discretion of policymakers. So why did I say that my interest in gold was peaked or began in 2002? It's about 22 years ago, or rather 23. And the reason is, if you recall, 2000 was the beginning of the stock market bubble that burst in the US. The NASDAQ technology bubble burst. Unfortunately, 9/11 happened in 2001. The United States economy had entered into a recession in 2001. And in 2001, the Federal Reserve began to lower interest rates, which was at 6.5% at the beginning of 2001. And by the end of that year, it had come down to 1.75%, the federal funds rate. By the end of 2002, it had dropped to 1.25%. And by the middle of 2003, it went as low as 1%. And given the role that the United States dollar plays in the world as a sort of an unofficial standard, dollar standard, because official dollar standard ended in 1973. Given the unofficial role that dollar plays, other countries also had to follow suit. If they didn't, their currency would have appreciated even more against a weakening dollar, because dollar's yield had dropped to 1% in the short-term money market, thanks to federal funds rate coming down to 1%. So every country therefore also lowered its interest rate, increased money supply in terms of dealing with the aftermath of the recession in the US. So naturally, there was a concern that inflation would resurface, and the Federal Reserve not only lowered the interest rate to 1%, but promised that the rate would remain low for a considerable period of time. And when it began to raise interest rates in 2004, Mr. Alan Greenspan promised the financial markets that he would do so at a very gradual pace. And the word gradual signified only 25 basis points of increase in every policy meeting and not more than that. So naturally, investors sensed that policymakers were going to be resorting to low interest rates and higher money supply as a solution to every problem that the economy confronted. And that is the reason when gold bottomed out at $250 or between $250 and $290 per ounce in 2002. And today, as we speak, it is up about 10 times from that level. So the point I'm trying to make is that gold became relevant as an asset in investors' portfolio when financial when policymakers began to look at money supply and currency debasement as an answer to all economic problems. We abandoned gold as a standard for monetary policy regimes in 1945. Between the First and Second World War, the gold standard came under a lot of strain, and countries slowly abandoned them one by one. And in 1945, even though Mr. John Maynard Keynes called gold a barbarous relic, he still understood the importance of discipline that gold standard brought about. And that is why one country was asked to be on a gold standard, which was the US, and other countries pegged their currencies to gold. So indirectly other countries pegged their currency value to dollar, which in turn had convertibility to gold at $35 per ounce. And therefore there was an indirect pegging to gold via dollar. And as the anchor country, therefore the United States had certain obligations to balance its books, not to oversupply dollars, in which case the convertibility to gold at $35 will not be maintained or maintainable. But as America entered into the war in Vietnam, and as America began to feel uneasy about the rapid recovery in Germany and Japan post-World War II and began to fret about its competitiveness, and therefore wanted to cheapen the currency, these arrangements began to unravel, and the climax was in 1971. And then by 1973, Nixon had taken dollar off the gold standard, the convertibility, and it became global monetary foreign exchange regime became freely floating. In other words, gold had not only symbolized solidity, but gold also symbolized policy discipline. And in a way, gold also should have symbolized investor discipline. Today, what is happening is that not only policymakers think that they can print their way out of any trouble, investors also think that they are entitled to rising prices of assets at all times, and therefore clamor for reliefs, forgetting the fact that the financial markets are a two-way street. The clamor for policy relief increases with every passing day when the market declines. But the gold standard imposed a discipline that if you are faced with excesses, you need to go through the discipline of purging the economy of the excesses. Gold will leave the country, money supply will shrink, asset prices will decline, unemployment will rise, wages will drop, and that is how you restore competitiveness and bring back the economy towards higher export competitiveness. This was the self-correcting mechanism that gold imposed. In other words, gold standard symbolized policy regime based on rules, and in 1973 we turned to discretion, away from rules. Rather, the process had begun in the 60s. So today, after 50 years, we are seeing the after effects of policy discretion, with people not satisfied with globalization or the distribution of the gains that globalization gave rise to between capital and labor. We are seeing the consequences of policy discretion in the form of asset bubbles, and people forgetting the fact that asset bubbles can also bust and prices can go down, but they want to engage in asset price speculation through higher leverage, forgetting the fact that liabilities are fixed, whereas assets can go up and down in value, and liabilities are legal obligations, whereas there is no legal obligation for the asset market to keep going higher all the time. So, the importance of gold is that it reminds people of the virtues of discipline, of the virtues of hard work, of the virtues of maintaining price stability. So that is why, even from an investment perspective, I began to recommend, when in my days as a capital market strategist in the financial services industry, working for the three major Swiss banks in their wealth management divisions between 1994 and 2011, And particularly from 2002 onwards, I began to see the role of importance of gold as a real asset at a time when discretion for central banks began in a very earnest way, and that continued. They doubled down on this in 2008 with ultra accommodative or ultra conventional, unconventional monetary policy, ultra easy policy, zero interest rates, quantitative easing. Again, that was resorted to in 2020 as well, after the pandemic. And in 2011-12 onwards, the European Central Bank began to flirt with negative interest rates, etc. I think the problem with these kinds of approaches is that it just keeps peppering over cracks. And the accumulated leverage has built up so much, not only in public sector, but also in private sector balance sheets, in households, in corporations, etc. Today, therefore, the global debt to GDP ratio is multiples of the GDP. And when such high levels of debt accumulate, debt becomes a dead weight because future earnings are required merely to service the debt and not so much is available for development expenditure. And second, countries will be tempted to use inflation as a means to pay down the real value of the debt, which is what happened between 1945 and 1975, because at the end of the World War II, countries like the UK and also partially the United States had high amounts of debt. Their debt to GDP ratio was too high, and by the end of the 60s, these ratios had come down. And they came down even further in the 1970s, partly because of inflation. So that fear is still there today in the world. How do the countries bring down the value of debt such that their tax revenues and non-tax revenues can be used for development spending rather than paying back debt? So given that this fear of inflation is still there, and given that the world is witnessing the after effects and the consequences of policy discretion that commenced in 1973, gold's importance will continue to remain very salient and very high. Not only in investor portfolios, but also as a store of wealth. In fact, there is a real risk that what Dr. Raghuram Rajan, what Mr. Paul Volcker, both of them in different forums had called the current international monetary system as monetary non-system. Because there are no rules, there are no signposts, there are no checks and balances on the discretion of policy makers. And we seem to be therefore relying rather than on savings, investments, employment and income growth, we seem to be relying more on asset prices and leverage. I just kept a timer for myself so that I don't overspend in front of you. I'll give myself a few more seconds to wind up. So we have an international monetary non-system where there are no rules, there are no disciplines, there are no guardrails for money supply. And the outcome was what we saw in 2022 and 2023 in combination with expansionary fiscal policy, extremely loose monetary policy. We saw inflation coming back towards high single digits or double digits in the developed world as well. And therefore, gold will remain relevant, not only as a store of value, as ornament for cultural and religious purposes, but also as an important portfolio diversification mechanism until such time the world is able to arrive at an international monetary system from the current international monetary non-system. That day of reckoning is very difficult for any one of us to prophesy at this stage. But if we abuse our discretion, as humans are wont to, we don't have the capacity for self-regulation, whether it is as individuals or as financial market practitioners. As long as we are what we are, there will be a need for external checks and balances, and gold standard provided that check and balance and its removal has brought us to where we are today. And maybe, as with many things in life, we will come back a full circle in some form or the other. When that happens, that is when probably gold, you can declare that the gold has served its purpose. So until then, it's very important to remember the relevance and the importance of gold for portfolios, as store of value, etc. So therefore, given the likely ascending importance of gold in the coming days, weeks, months, and years, I'm glad that there is a gold policy center in India, in the Indian Institute of Management, Ahmedabad, continuing to keep gold at the center of the policy discourse, at the center of public discourse, etc. And therefore, as long as gold remains relevant and important, the role of the Indian Gold Policy Center at the IMA will also remain relevant and increasingly important in the coming days. I therefore wish this conference all success in its 2 days of deliberations, in the exchange of views and ideas between policymakers and practitioners, and hopefully India will find ways to productively deploy the gold assets that it has without diluting its role as a symbol of store of value and cultural and religious significance for the owners. And that is where the policy challenge lies. In all the gold monetization efforts, the government has attempted to pay back the owners who deposit gold in currency form, but probably people attach a different significance to gold, and sometimes we tend to forget that in the policy deliberations. That needs to be reflected on, and I hope these 2 days will provide you the opportunity to reflect on these issues. And thank Professor Sundaravalli Narayan Swamy, Dr. Bharat Bhasker for giving me the opportunity to share these thoughts about gold with you at the beginning of this conference. Thank you very much.
Thank you, sir, for your thought-provoking and insightful words. Your perspective adds immense value to our gathering today as an investor and strategist defining the economics behind gold as a relevant asset as well as a guarantor for purchasing power, while reminding us for the need for policy as well as investor discipline. I invite Professor Sundaravalli to felicitate our chief guest. Thank you, Dr. Anantha Nageshwaran. Thank you, Professor. Thank you, Professor Sundaravalli. Yes. Yes, yes. Sir, photo. Oh.
Yeah.
Now, moving on to a moment of recognition and celebration, we take this opportunity to honor excellence in gold research through the declaration of the much-awaited MCX Awards. I invite Mr. Shivanshu Mehta, SVP and Head Bullion, MVP, MCX and Director, IIBX and IIDI to announce the awardees.
Thank you so much. Dr. V. Anant Nageshwaran ji, Chief Economic Advisor to the Government of India, Professor Bharat Bhasker ji, and Professor Sundaravalli ma'am. It is indeed a privilege as India's leading commodity exchange and especially bullion exchange it is actually a privilege, and we consider it incumbent upon us to work towards making bullion, gold, and silver as a developed asset class in the country. And it is also a sense of shared pride that as an Indian exchange, as per the data of the Futures Industries Association for the year 2024, MCX is now the largest options exchange, commodity options exchange in the world, and the second largest in terms of bullion. This is by the number of contracts that are traded. So I think I cannot, even if I tried to paraphrase gold better than how Dr. Saab has just done in his speech. But definitely, whether it's a currency or it is a metal, it is an ornament or jewelry or a hedge against inflation or geopolitical turmoil, India's presence and India's intuitive knowledge across generations about gold can never be undermined. And I think it can never, be sufficient that we sort of, do not work towards understanding this in greater detail and in spreading that awareness in the 140 crore, individuals that we have. And we have noticed this growth over the years in the capital and commodity markets as awareness has been increasing. The participation, the informed participation by investors, as well as hedgers for their price risk management, has been on the increase on the exchanges. And we consider it our endeavor to continuously work towards this. So it is with this spirit that we work very closely with the India Gold Policy Center, and we have worked with them on areas of research. And we would like to recognize the best research papers annually, and this is as decided by an independent jury, which is in place. So it is indeed my privilege to announce the two winners. The second prize goes to the repositioning, making charges in gold jewelry retailing to drive industry change, customer and jewelry perspectives, by Professor Priya Narayanan, Assistant Professor, IIM Kozhikode, and Ms. Chavi Baghel, Student, IIM Kozhikode. Requesting them to come to the dais, please. And now moving on to the first prize winner, very interestingly titled God, Gold and Governance, a network analysis of transoceanic trade, wealth accumulation, and early empire building in the South Deccan, by Professor Anandita Chakrabarti, IIT Kanpur, and co-authored by Mr. Siddharth Prem Kumar, researcher, IIT Kanpur, please.
Congratulations to all the award recipients. With this, we conclude the inaugural session of IGPC-IIMA GGMC 2025. We now move on to the next segment of the event, Stay engaged, stay inspired, and let's make this conference a remarkable success. As we gear up for the upcoming panels and sessions, please take a short break to refresh and recharge over tea. You can find the tea outside. Thank you. We can assemble back here in half an hour.